Welcome to Love, Money, and the Law. I'm Cindy Hyde, your host, and this is part of a series called The ABCs of Divorce. Today, my guest is Noel Cookman. Noel Cookman created the divorce lending industry in 2002. He's a frequent presenter to family law attorneys, realtors, and other mortgage professionals about the intersection of divorce and home finance. Noel is here to give us some tips and valuable insights into how home financing works in a divorce. We're talking purchasing, refinance, and buyouts. Welcome, Noel Cookman.
Thank you. It's an honor to be with you.
Typically, the biggest asset in a divorce has to do with our home. More often than not, I would say it's finance. There's a mortgage. There's an underlying mortgage. Mm-hmm. You need to understand how we're going to, pay for that home after there's a divorce. I mean, is it possible to stay there, or do we need to sell the house, or what happens, if we can't just divide by two? So, could you please talk to us a little bit about understanding the current mortgage that someone might have? What are some things that we need to look at, both as lawyers and as parties to a divorce action, that might be critical when we're talking about dividing the assets during this time?
Well, that's why I got involved in this, and the reason they say that I'm the creator of this divorce lending industry is because when I started back in 2002 and I had this idea, I couldn't find anybody in the country who was doing it. Mm-hmm. And I saw a problem and I jumped in and I said, basically, what if? And one of the things we first ran into was some of these myths. You sort of touched on it just a minute ago. I guess the radical illustration of this big asset that gets divided is that story. Maybe you saw it several weeks ago. I think it was up in New Jersey. The judge said, "Sir, you get half the house, and wife, you get the half the house." And he was so messed up, he took a chainsaw and went on top of the roof. And of course, that's when the police came, and he was literally just cutting his house in half. Which I think he was just trying to make a statement, but because of some of those assumptions, maybe not that particular one, but some assumptions about, for instance, the first one we ran into was you have to sell the house. Mm-hmm. The assumption was that it took two incomes maybe to buy it, maybe not, but it was just kind of an underlying thing people just assumed. And so that's where I came in years ago, and I said, we're going to address these myths. And a lot of things that, as a new mortgage professional, I was seeing, and I was thinking, that's not true. They don't have to sell the house. And so, but I didn't know that much about the law. I'm not a lawyer, so I would ask people like you. I'd say, is it true they have to sell the house? No, there's no legal reasoning, and there's no, in the mortgage world, there's no mortgage reason that they have to. Mm-hmm. It's a matter of numbers. It's a matter of who can qualify. A lot of people talk around a table where they're trying to work out a divorce. She can afford it, or he can't afford it, or she can't afford it. All of these things get talked about. Mm-hmm. But the question I dealt with was, can he or she qualify for the mortgage? Generally, if they can't qualify, they can't afford it. And generally, if somebody, people with good credit can qualify for more than they have good sense to borrow. But the point is, I deal with, can I qualify them for when they divorce and one wants to keep the house? And that happens a whole lot.
Okay,
Sure.
So let me stop you right here for just 1 second. So the question might come up, well, we already have the house, we've got the loan, why does anybody need to qualify at this point? Let's say if mom keeps the house, dad moves out, we have a loan, this is how much the monthly payment is. Why is there a qualification process there? And what happens to that underlying note when there is a divorce?
Mm-hmm. So two reasons that a homeowner would need to get financing. One is, if both parties are on that mortgage note, the liability doesn't just go away. Mm-hmm. Now, this is a misnomer or a misconception, I would say, in court. I've had people tell me, well, the judge said I don't have to make payments anymore on that house. What the judge meant was, I'm not going to make you make payments. Mm-hmm. But if the ex is on that mortgage note, then the liability doesn't just go away because there's a divorce and the court says you're supposed to make the payments.
So
the
that
other is still liable.
So that ex, after divorce, is still carrying that on his credit report.
Credit.
He still has that obligation. So unless there's a way to release that spouse that is, remains on the note, that stays there unless the home is refinanced, right?
Yes. So
Okay.
here's a cool little thing that the folks might really like to know. But you got to listen to all 45 seconds of what I'm going to say, or else
Okay.
you could go out and say, oh, it doesn't matter. It does matter. Say the husband and wife are on the mortgage note, and the wife is keeping the house to keep the kids, in the same house, the same school and everything. And the husband just says, look, finance and get me off the mortgage. Here's a cool little thing. If the husband wants to go out and get his mortgage, if he calls the right mortgage lender, somebody who knows what they're doing, then that debt, if it is assigned to the wife, in this case we're talking about, then that debt is actually excluded from his what we call qualifying ratios. There's a little box in our software where we just click it, excluded, debt excluded. Now you have to prove to the underwriter why it's excluded, but guess what? The reason that you can exclude it is that debt is assigned to another party in a legal document, like a divorce decree. It's not verbatim from the guidelines, but that's basically what it says. So, in that sense, the husband doesn't have to say, well, I can't go buy another house because I can't qualify, I can't afford, that payment and this one. Well, yes, he can if he qualifies in other respects. However, that just because we can exclude that debt from him doesn't mean that the debt just goes away. In other words, if the ex defaults on that, it ruins his credit.
Yes,
and
it would.
you can say, well, look, the judge told her to pay it, or the court, the agreement was that she paid it. Doesn't matter. Ruined his credit. Why? Because he signed that promissory note, and until that loan is paid off, he is obligated. Every party who signs it is always obligated until that note is paid off. Now, I know this could go down a rabbit trail here about people say, well, the bank said I could assume the note. Well, that's a whole other thing that we might talk about at another time. Don't trust it. And you can go on my blog and find out, some articles about that. But so that's the number one reason why the wife in this case, or it could be the husband, has to refinance that debt to get it out of the ex's name.
So what is the process for doing that in the context of a divorce scenario? I mean, when can someone start to have these conversations, first of all, if they've made a decision that, okay, mom's going to stay at home with the kids, or stay in the home with the kids, rather, and dad will move on. So then, when is this part of the divorce process? I mean, when can you get a phone call, basically?
Well, I'll tell you what almost all the lenders out there are saying, what everybody, the street wisdom is about it, is that you wait till your divorce is final. Like you call your bank or mortgage guy and say, hey, I'm getting a divorce. I got to refi, get the ex off the mortgage, maybe do a buyout. We'll talk about that maybe in a second. But here's generally what banks and lenders are telling people. Well, get your divorce final. Sorry about what you're going through. Get your divorce final. I can kind of pre-qualify you. I'll pull a credit report and make sure everything's good. It's totally worthless. So that's what that's what's happening most of the time out there. Is like, get your divorce final the day after, bring us to the decree, let's see what we can do. It's too late. Too much water's gone under the bridge. Here's what, and here's where we were totally contrary to the system almost 20 years ago now. We said, is there any rule, any law, any mortgage guideline that says we can't take an application while they're going through the divorce? Even before they file petition for divorce, maybe? Is there any rule that said? There is no rule. There's no rule that says you have to take an application and close that deal in 30 or 45 or 60 days. Now, you have to do certain compliance things, but I said, why don't we take the application early, develop the approval? Are you a hockey fan? Do you know Wayne Gretzky?
Sure, everybody knows
right.
Wayne. Yeah.
Oh, of course. What do they call him? The great one. Anyway, even if you don't follow hockey, you probably know this quote by Wayne Gretzky. I said, what's the secret of your magic? You're just magic out there on the ice. You score more goals than anybody else. He says, I always skate to where the puck is going to be, not to where it is. So I said, why can't we do this in mortgage underwriting? Why can't we find out where are we going in this? What's the end goal? Wife, you need to refinance, get the X off the mortgage. Okay, do we need to include a buyout to the X? Where are we going so that we don't start the day after a divorce? As a matter of fact, this year and for the last couple of years, we've been closing our refinances where even when there's a buyout to the X, we've been closing them second and third business day after final divorce. And we only need that time for clerical work. As a matter of fact,
that's impressive. That's very impressive.
My credit manager is one of the vice presidents, and even the president this past August promised me. He said, "Look," I said, "Look, I want to do this one thing. I want to get a divorce decree at 10 o'clock in the morning, faxed over to me, and I want to close that loan at 4 o'clock that afternoon."
Oh, you're good if you can do that.
We'll do it. We've done it the day after a couple of times and 2 days after. But the reason is the heart and soul of why that can happen is because we do it the opposite way that everybody else says to do it. We take the application, we process, and of course there's a million reasons, and I apologize for talking so fast, but I get excited about this because I can see how we can help so many people going through a divorce. We can help them qualify in advance of that final divorce so that when the divorce is finalized, we're promising our customer, whether it's your client or opposing or whatever, we're saying, we'll close this deal. We're not we're not saying we hope we can get it done or let's see what happens. And
you can do it.
It's done. It's underwritten. It's not just processed. We haven't just pulled a credit report. The loan is underwritten. The appraisal has been reviewed. Now, I know a lot of people are thinking, wait a minute, that's not the way it's supposed to work. That's not the way they told me. But we've done it for over 15 years that way.
Smart. So let me ask you then about qualifying for this purchase beforehand. So let's talk about some of those parameters because, you might have spousal support at issue. You might have child support as income. Someone might just be entering the workforce. So how do all of those factars play into how do you qualify for someone?
You want me to give away a little secret here,
I
don't
do.
you? Okay. I love to do this, but on the other hand, I'm giving away my secrets. They're not really secrets because they're in the guidelines. It's nothing I made up, but I just read them, I guess, in a different light. So here's a cool secret. If you're divorcing right now, thank God and your lucky stars you tuned into this program and you're listening to Cindy Hyde, but this is amazing. For child support or spousal support or alimony, contractual alimony, however it's all considered support in the mortgage world. And there are two main features that are required for that to become qualifying income. So you can't just say, I'm getting child support. Hey, look at the bank statement, I got child support. The lender doesn't say, oh, okay, I guess you're getting child support. No, there have to be certain metrics in place. And here are the two main metrics. There are some others, but the two main things are two numbers. Has it been received and documented as having been received for 6 months? So we have to go with our customer. We have to say, here's the documentation that we need to start. And here's exactly how we want it documented. We tell them painfully, in painful detail, look, here, do it this way.
So, excuse me, in this context then, that means that we, as lawyers, family lawyers, we need to jump on child support or spousal support right away, early in the process.
Exactly, because we live by documentation. You live by judgments and orders and agreements in the legal world. And so that's the way you think. And we're bound by that. We have to live by that, but we also live in documentation. So the mortgage guidelines say something like this: document that spousal support or child support has been received for 6 months. Well, guess what? Even before that support is ordered, now there's a little nuance in Freddie Mac's thing that requires it to have been ordered, but Fannie Mae's the biggest, and FHA and VA just overshadow Freddie Mac. So all it requires is the documentation. So they're going through a divorce, and everybody thinks they're going to get it done in 61 days. I know, but let's say it takes 6 months. Probably, I don't know what the average is, but it can be months.
Yeah.
Well, at the very beginning we say, what is child support going to be? And they usually know because they've talked to you and they know, hey, look, I know what the support's going to be. So we say, look, start documenting that right now. Now, they'll need to call you or me to find out exactly how that can happen. Remember, because they can, between a husband and wife, they can create a paper trail of having paid that support without actually paying any extra money. It's how you create the paper trail.
That's a technical issue in the drafting, actually.
Okay. Right. So, but when you're documenting it, even before it gets drafted or the final decree, how does it get created so that, or how does it get paid in a manner that it gets documented? That just remember, folks, it's documentation.
Right.
That's the key.
Right.
So, so you need 6 months of documentation. Start that as soon as possible. Don't do it on your own. You know,
this is where you need a family law attorney involved, right?
Call Cindy, and we'll get connected. But it can be done, and it's not super complex. Then the other thing is it has to continue for 3 years. Not
at
30,
least.
At least. Yes, I'm sorry. At least 3 years, right. So we're trying to find out. Remember, we're trying to skate to where the puck is going to be. We're saying, how old are your children? See, 14. When's their 15th birthday? Because then that's kind of starts a 3-year thing. Or what grade are they in school? It starts that 3-year thing before emancipation.
So that's really an incentive to get your decree signed too. That's another incentive for an enthusiastic settlement, let's say.
Want me to tell you one more secret?
Sure.
Here's something where you can game the system. I mean, it's not unethical, it certainly isn't illegal, but you can game the system if you're going through a divorce. Apply for that loan right now. Now here's why. That 3 years, I just said it, the support has to continue for 3 years. The trigger date for that 3 years is not when your loan closes, which you would think it would be. You would think the lender would say, hey, if I'm going to close this loan on February 15th or whatever, I want the support to continue 3 years from that.
Exactly.
I'm underwriting this loan based on what's going to happen for the next few years. The guidelines actually say from date of application, not from the date of loan closing.
Right.
So
that's critical. That's a critical piece of information.
It can save the whole deal. So that's why, that's just an example of what gradually through years has gone through our minds, like why? And we start pushing back and we say, are you sure it has to be this way? And I want to see the guidelines about that. And so that's why where we discover these things is pushing back, not accepting the street wisdom or whatever you call it, what everybody else believes about how a mortgage has to be done and what they heard. Like, remember, started off talking about, oh, we got to sell the house and everybody's got to get their own half-size house.
Right.
No. It's a matter of numbers. So let somebody that knows what they're doing work on the math of that. It's not magic. It looks like magic sometimes. People tell me, the lawyers say, oh, man, you're a magician. You just did. No, it's math. It's not magic. But let somebody who knows how to do that math work on those numbers for you. The bad news is there are there's just not very many divorce lending specialists out there.
I agree
the good
with you.
news is I know a guy. So
Noel Cookman.
You can get connected. And we're training more and more people, and we really have a passion.
I can see that.
It's a huge order, but we've got to get to
such a value in what you're saying. Now, let's go back to qualifying for the purchase. That is going to necessarily include a credit history, credit checks. So let's talk about some of those credit issues. Maybe someone's credit is not that great and we're looking to apply for a loan. Is there any insight that you can give us to what someone can do to help improve a situation? Or
well, as you can imagine, we deal with that a lot of times. Maybe not as much as you think, because people tell me, oh, if you're dealing with divorce, and that's virtually all I deal with in mortgage finance, you probably see a lot of messed up credit. And sure we do, but you'd be amazed. Don't stigmatize divorcing or divorced people as people with bad credit. No, that's not true. It probably just happens as it does to the general public, as far as credit difficulties. So that's another reason that a person who's going through a divorce, or they see that divorce in their future, they need to apply for the loan now because, and here's another secret. When the old days, you would pull a credit report. I'm sorry, we can't do your loan. Your credit score is too low. Or look at these late payments. Look at all this stuff. Well, now we have such advances that the credit repository that we use to pull our credit reports also has, and almost all of them have it now, also has what they call a credit wizard. There's different names for it, but we push a few buttons and it tells us, here's what this person needs to do to get their credit score to ascend.
Oh, so there's actually a very methodical way to do that.
Yes, I mean, it's computerized.
Okay.
We don't try to figure it out. We know certain things to help enhance your credit score. The credit bureaus don't actually tell you that very much anyway, because they make their billions by being secretive, and their algorithm is a secret, you know. But these programs that the credit repositories have now are amazing. They will tell you, just as an example, you've got a $1,200 balance on a $1,000 limit, which is going to really hurt your scores. They'll say, I've seen something like this before. It says, pay that account balance down to $728, and then the next day, pay it down to $600. I mean, it's crazy.
So how do you
like
know?
that.
How do you know what to do? I mean, is that also something
The computer
that
knows.
the computer knows, but I mean,
right.
how do you fix? So if I'm working with you in the context again of divorce, and but you know, oops, we have a little bad credit. Can you give direction as to how to do on what day, how to make those payments? Is that right? Or?
Yes, well, the direction we give is to print out that computer program and say, here's exactly what it says to do.
Okay, there's such a thing.
So
All
it's
right.
a 5-page report or however many pages. And I'm just trying to quickly describe what can happen. And the report can tell you how long it will take you to get to that score. And you can actually tell it how many dollars you have to put toward debt. I guess the takeaway in this is, don't try to repair your own credit. Certain things, sure, you know, don't be late on payments and don't have revolving accounts with 90 to 100% of balance against the limit, that kind of stuff. But don't try to fix it yourself. If you're like, I'm getting my refund check and my IRS refund check, or I'm getting this, or I have $1,000 or $10,000. Don't do it on your own. Don't say, I'll pay this against that. Get somebody like me to pull your credit and push the buttons.
Okay.
And that program will tell you to the dollar what to pay against which account. And that will cause your scores to go up.
Perfect.
So that's how we deal with in a divorce situation, just like we would anybody.
Does that happen very relatively quickly too? I mean, you can move your score up pretty fast, because if you're in a divorce, you're going through a divorce. I mean, you might not have forever to manage those monthly payments. So even a few months can be helpful, right?
Well, I guess there's two answers to that. One is the program will tell you immediate increase in score. So as soon as it hits as soon as that creditor receives the payment and is able to report it, or you can kind of short circuit that whole thing, or it takes 2 months or whatever. But then the other part of that prong of that answer is this, that's part of my role to tell the customer, your client, and then I report to you as the attorney. I say, I can get this deal done. I can get the loan closed, but I need 3 months, 4 months, or whatever it takes. And think about it, that's a heck of a lot better than sitting across the table and the other side saying, she can't do it, she has bad credit, she has this, and she can't. It's a heck of a lot better to walk into that mediation, which is super popular now, and I think it's a great, great thing. But whether it's a meeting, with everybody, or a mediation, formal mediation, or the court or whatever, to walk in there and say, oh, by the way, the loan application has been taken, it's been processed, it's been underwritten, sign here, and we got a deal.
Yeah, that's amazing. That's an incredible way to enter a process of mediation like that. I mean, you've got a big portion
Saves
of
2
your
hours.
Yes.
Sometimes don't want it. It's like, hey, we got this done. So I think, and then think about it from the other side, because a lot of times the other side, they don't know. They're like, oh, why should I? And I would advise them, don't just leave your credit at risk. Don't say, okay, you get the house, just make the payments and refinance it out of my name whenever you can. No, you need to have a specific time frame. You
Agreed.
need to know. Don't
Agreed.
just throw it to the wind. So if I come in and let's say the other side is saying, I want my name off the mortgage, and by gosh, I'll give you 60 days or whatever. What if I come in and say, look, I can do it in 4 months, but I can do it. Now that takes
that feels a lot different.
Yeah, you see what's driving
You
that
have that
person? They don't
certainty.
know.
Yes,
But when
yeah.
you say, I know, and here's the proof, I can do it, then it's like, and oh, by the way, this debt's not going to count against your debt ratios since you want to go on and buy a house. That's just a heck of a lot better to be able to say, okay, well, I'd like it done in 60 days, but if for sure it's going to be done
Right.
in 4 months,
That's
sure.
a very secure feeling.
Yeah.
Okay, let me ask you about this scenario. What if you've had a stay-at-home mom for a big length of time, and she's going to go back to work, but she'd like to stay in the house? So how does a lender look at that if she does get a job and the income would be enough to support paying a mortgage and her other expenses?
Well, that's another example of skating to where the puck is going to be. And that's part of our advising. Now, most lenders will say, well, you don't have a job, call us when you do have a job. What we do is we say, what would it take? How much pay do you need to qualify for where we're going? We try to project into the future and then reverse engineer everything.
But is it pay or is it time and history in work? Because I've
Well,
heard that you've got to be at that job for a while before you'll be considered. Is that true?
Maybe.
Okay.
And this is where we can bust a few myths. There's the 2-year thing that people hear about, and you need a 2-year work history. That's sort of kind of true, but don't do this at home. So that's generally applies to self-employed people. Like if you go to school and you got your law degree and you go to work with a firm and they pay you, W-2 and pay stubs, then your income is what we call immediately qualifying. Day one, first pay stub. You want a house? Boom. If the pay justifies it, boom, you got it. You got your house. So in divorce, where you have a stay-at-home mom, it's not like she hasn't been working, by the way. She's been raising kids and being a wife, so she's been working pretty hard. So not that the mortgage industry, recognizes all of that. But here's what happens. Does she have any education in the past? Does she have a degree? That's one of the first things we'll look at. Because if she does, just like you got out of law school, you have 2 years of experience. What is that 2 years of experience? It's your education. All right. So you don't have to go to work for 2 years. If you start your own business, you got to prove for 2 years that you can make it work, and they use that income. But one thing what you want to watch out for in divorce, and this is why we underwrite our loans fully before the final divorce. Here's just one of many questions we answer. Out of work 10 years, she had experience before. There's what you call in mortgage underwriting is called back to work. The lender can say, sure, she had experience years ago, but we want to see that she is, quote, back to work, earning money in this field. Or the field she's working in is not quite as connected to that old experience she has as we like to see. But whatever, we want to see her, quote, back to work. So it could be up to 6 months. So we want to underwrite that loan because that's one of those gray areas. I mean, the underwriters have metrics and they can look at certain things, but that's an area that we don't necessarily know. So I'll put that loan in underwriting. I'll say, I want you to tell me in 2 days, I want you to tell me how many months back to work you want my customer to be. That way I can tell the customer and her attorney or his attorney, I can say, look, I can close this loan at such and such a date because he or she will be back to work. It could be 2 months. It could be nothing.
It's very fact specific, though. Basically, that's
Yes.
what you're saying.
Well,
Okay,
we'll get
but
the-
it's not impossible.
No, we'll get the feedback and we'll know.
Okay.
That way everybody knows. So
Yeah,
again,
that's
stay
really-
to where the puck is. Don't just assume things and don't focus on where you are now.
No, that's very valuable piece of information. Also, especially for women who are in that situation, because I know often I'll have clients in my office that say, maybe they've started their own business a little bit on the side, or they do have a degree, but they just haven't been in the workforce for a long time, and they're just scared. I mean, they're scared to what's going to happen to the home. I don't know if I can stay here. All these questions come up, and so this is really, really very a positive, optimistic possibility to, to have on the burner if they find the right job, I guess, too.
Well, what's amazing, I believe in a power that's greater than me. I don't want to get religious or anything, but it's just amazing to me how things can work out.
That's true.
And so one of the first things I tell every client that calls me, I feel like they're put in my life for a reason. And I just feel, now, not everybody's like that. Some people get crossways. I know that's hard for everybody to believe, but it's possible that somebody doesn't like me out there, I suppose, and I get crossways with this person or that person. But for the most part, I know you can't believe it.
I doubt it.
But,
I seriously doubt that.
But I genuinely have a super optimism about everybody who calls me. And I feel like one of my roles has nothing to do with mortgages or numbers or math or dollars. It has to do, or the divorce, it has to do with just saying something to them and say, look, if you can trust me right now, your life is going to be okay. You're going to be fine. I am optimistic, and I have a good reason to be optimistic about your future. Now, part of it is business and math and dollars, and because I know I can get them where they need to go. But the other part of it is kind of intangible. I can't explain it totally, but I just know that's why I'm there, and that's why we're on that phone call.
That's amazing. We're going to have all of your contact information on the podcast and the YouTube site, where everybody
Awesome.
can find out where to find you if they have more questions, and if someone is in this situation. I mean, whether it's lawyers that might maybe want to call and just ask a few more details, or there's someone who's considering getting a divorce. I mean, they should feel free to call you, right, and have a chat and see.
Well, they should really feel free to call you, because
yeah.
Please don't get a divorce without an attorney. I don't care what they're telling you out there
That,
about
100%, yes.
Oh my gosh, I've seen it all. That's a book I'll write one day. But they need to call you, and please call, and it'd be a great honor to speak to people. I speak to as many people as I can about solving problems, getting them through this intersection so the gears don't strip between the gears of mortgage and gears of divorce. And it would be my great honor to take those calls.
Okay, wonderful. Noel, thank you so very much for your time today. It was very, very helpful, and I know you gave a lot of people some, very uplifting support in knowing that there is a future after divorce.
Awesome. I'm your biggest cheerleader.
Okay.
I love what you do. It's important. You do awesome stuff.
Well, thank you. That's all for now. Thank you for joining me. I'm Cindy Hyde for Love, Money, and the Law.